Okay, let's start for today. Tutorial 10, current liabilities and payroll chapters. Last week we discussed about the many concepts related to this. So current liabilities and payroll, beginning of the courses, we started with adjustment, trial balance, this and that, and then we slowly moved to the inventories, and then current asset, cash, bank reconciliation statement, and then last class in the tutorial we did about the non-current asset depreciation, calculation of depreciation using the different methods, and in today's tutorial we will be focusing current liabilities. Okay, and through this basically we are going to finish most of the contents. Next week in today's lecture we will be talking about partnership, and next week will be the tutorial for partnership. Okay, so basically the framework in terms, we are not going to study non-current liabilities, which is a bit difficult. In the next course in financial accounting you will be doing this non-current liabilities, issuing the debenture, issuing the share capital and other stuffs. Okay, so let's start with today this question. Accounting for a note payable. A note payable is usually a current liability. We buy any products, and then instead of accounts payable recording, what we can do, we can give them a notes. What is the difference between accounts payable and notes payable? Do you remember from the last class? Very good. Notes payable has an element that is interest. Accounts payable usually do not have any interest. Okay, so notes payable usually you will find always with an interest attached. Now journalize the business, accrual of interest expense 31st December and payment of note plus interest on 30 June 2017. So the first one is actually an adjusting entry. Okay, the accrual of interest expense. Look at the question. We provided this note on 30 June 2016 for a year, and we will be paying money after 1 year. Is that okay? We will be paying after 1 year, but our recording or accounting, the whole accounting statements that we need to prepare is by 31st December 2016. That means we have to record 6-month interest as a payable, and when we are actually paying on 30 June 2017, then we have to give again another journal entry for the payment of notes payable and also for payment of interest. Okay, first give the accrual of interest expense on 31st December. Record the journal entry there. We try to record this accrual of interest expenses. Can you try? Let's do. What is the journal entry for recording accrual of interest expense? No need for the amount first, give the journal entry first.
Interest expense
To
interest payable.
interest payable. Is that correct? Very good. Interest expense debit to interest payable. What is the amount? 500. Is that correct? Did everybody sign the documents? Did you sign? Hmm? How much is the amount? Is going to be 500. Very good. It's going to be $10,000 into 10%, but basically only for 6 months. Now give the second journal entry, that is payment of the note plus interest on June 30, 2017. That means we are paying the notes actually this on that day. Yes, sign. Okay. Anyone? What will be the journal entry? Notes payable debit, and then interest payable, debit, and then cash. What else? Very good. That's going to be interest expense debit. Why interest expense debit? Anyone else? We already wrote notes payable debit. We already wrote interest payable debit as well. What is the amount? Notes payable debit. What is the amount? No. Notes payable is debit by $10,000. Okay. Interest payable debit by $500. Very good. And then interest expense, because this is interest payable for 6 months that I recorded. This year also I have another 6 months. Is that correct? Because the notes is for 1 year. Last year I recorded 6 months interest expense, but this year also I have to record another 6 month interest expense. Last year why I recorded is payable, because I did not pay at that time. But I'm paying this year, so I'm not recording payable. It must be for me interest expense debit. That's going to be $500, and that's going to be $1,000. Okay. It's $11,000. Okay. Any question with this? Okay. Let's do this one. Okay, can you produce a very small income statement and also a balance sheet, so that first prepare a balance sheet and then we record the income statement for 31st December. Okay, for 31st December, create a balance sheet and also an income statement for 31st December. So how will you report? Balance sheet means actually in the liability section we want to see what is things to be reported based on the journal entry. Okay, and if I make another income statement on the same 31st December, what shall I report in the income or expense side? Just based on the transaction that we recorded, 2 transactions that we recorded actually. if you create a balance sheet on 31st December, in the liability section, what you will be reporting? Look at the transaction. On 31st December, what do we have? To report anything in the liability section? Anyone? How? Interest payable, that is one, right? Interest payable is how much? 500. Good. That's all. Anything else? No one? Look at the transaction if you want. Here, on June 30, Cameron Clothes purchased $10,000 of inventory on a 1-year note, that is 10% notes payable. So, in the December balance sheet, we reported already interest payable. What else we can report from this transaction? Notes payable. Very good. Notes payable, how much? Should be $10,000. Very good. An income statement. What shall we report in the income statement? Interest, expense, how much? 1,000 or 500? What do you think? 1,000 or 500? 500. Because on 31st December, if you see the journal entry that we recorded, it's interest expense debit, interest payable credit, only 500. Okay? $500. Okay, this one. Record the sales, warranty expense and warranty payments for Thomson Toyota. Look at the questions. Okay, Toyota, the car manufacturing guarantees its vehicles for 3 years or 100,000 kilometers, whichever comes first. Suppose Toyota's experience indicates that it can expect warranty cost to equal 3% of sales. Okay, assume that Thomson Toyota in Adelaide makes sales for Toyota Corollas totaling $500,000 during 2016, its first year of operation. The business received cash for 30% of the sales and loans receivable for the remainder. Payment to satisfy customer warranty claims total $10,000 during 2016. These payments are not reimbursed by Toyota. First of all, we need to record sales. Okay, we need to record the sales. Give me the journal entry for recording sales. Okay, see, sales is $500,000. No, write it, write, everyone, write it. Write the journal entry. Write the journal entry. One point. If you can correctly write it, 1 point, 1 bonus point. First, we give the journal entry for sales, okay, and then we go for warranty expense and warranty payments of Thomson Toyota. But first of all, done? Okay, we wait for others. Let's see. If correct answer, then 1 point. If wrong answer, then -1. Okay. No. That means not confident.
Cash debit,
Okay.
account receivable debit,
Okay.
sales credit.
Okay. Anything else? Okay, this is one answer.
Account receivable debit and sales revenue credit, and again cost of sales debit and inventory credit.
But did they write the inventory? Anything? No, right? When you were right, there is always two journal entry for sales. That's okay. But they didn't write what is the amount of inventory, cost of sales. Did they write? No. Then you can't. We can't give their journal entry, right? Anyone else? Final 30 seconds. If you can give the correct journal entry for this, you will get 1 bonus point. Otherwise, 0 bonus point, or maybe deducting 1. But no deducting anyway. No deduction. Bonus point 1.
Cash account DR, and cash account DR to sales account and loans receivable account DR to sales account.
Very good. You get 1 bonus point. But you need to get amount.
Amount is like cash account is 1,50,000 and the account loans receivable is like 3,50,000.
50,000. What is the difference between your answer and his answer? It's accounts receivable. No, it's loan receivable. It's not accounts receivable. That is the mistake. Is that okay? So in the exam also you need to be very careful whether they said accounts receivable or loans receivable. Okay? It's good that we make a mistake here, but we avoid mistake in the exam. So what is the difference? I said loans receivable and accounts receivable has a difference. What is the difference? It has an interest element, right? So if I just write accounts receivable, simply I'm ignoring the fact that there is an interest attached with this one. So that's why we need to mention this one. Very good. The first journal entry, so we can actually make together, is going to be cash debit and then loans receivable or notes receivable, whatever, debit, and then sales revenue credit. What is the amount? Cash 150,000 and then 350,000 and then sales revenue is going to be 500,000. Okay, very good. Are you okay?
Yeah.
Come here. You'll do good.
Sorry.
If you come here, if you listen from the front, you should get more bonus point. Okay? Yeah, we'll come. We'll announce already. You missed 2 bonus points. One is for coming early. That's you lost. And second one, you missed another one. So let's do it. Okay? Very good. Can we move to the next question? I mean, is there any problem with this? I was expecting everyone to be able to solve this one. What did you think? Did you have any other answer that you made a mistake or you wrote something else that we can clarify? Thought process is important, right? What did you write comes from whatever you learned. So is there any problems or why it didn't match with this answer? Anyone from here? What did you write? No? Same answer? Similar to this? Sleepy? Okay, let's go with the next one. Warranty expense. So we need to record the warranty expense as well. Give a journal entry for warranty expense. 1 minute. Give a journal entry for warranty expense. Warranty expense to accounts payable. Anything else?
Warranty payable.
Warranty expense to warranty payable. Okay, not accounts payable. Don't make a silly mistake. What is the amount? 15,000, right? is going to be $15,000. Okay. Cash debit, warranty expense debit to warranty payable, credit by $15,000. Very good. Now, warranty payments. The third journal entry, warranty payments. Warranty payable to warranty expense. Anything else? Warranty payable to?
Cash.
Yeah, whenever we pay anything, definitely the account is going to be cash, must be credit, right? So why warranty payable is going to be debit here? Any idea?
Because we are reducing the amount.
We are reducing the amount. This one, what I told you earlier, to think about a reserve. Okay, I'm going to give $15,000 as a warranty expense in this year, but actually I pay. So this I already recorded as a liability. Is that correct? But I need to reduce the liability because I paid $10,000. So I am going to reduce my liability by warranty payable debit $10,000. That means warranty payable, my liability is going to decrease by $10,000. Is that okay? And how the money is going out is by cash. So cash is going to be credit. So we give the third journal entry for this. Is going to be warranty payable debit to cash credit. What is the amount? Okay, that's a good question. What is the amount? 15,000? 10,000. So again, need to be careful. We actually paid $10,000, not $15,000. Okay, so warranty payable debit by $10,000 and cash is going to be credited by $10,000. Three journal entry, very important, this question as well. So need to be careful, especially in journal entry. And now the second question is that post estimated warranty payable T account at the end of 2016. How much in warranty cost does Thomson Toyota still expect to pay? Can you draw a T account for estimated warranty payable? Okay, and see how much balance they will still have to pay. It's easy, even without T account we can do it. How much? 5,000. Anything else? Look at your journal entry. Just do a T account from the journal entry without drawing anything. Can you see?
5,000.
It's going to be 5,000 because in the credit side it's already 15,000 and in the debit side again another $10,000. Basically there is a credit balance of $5,000 of warranty payable, means I will still have to pay $5,000 warranty. So in the exam, if the question is like this, how much warranty payable is still they will have to pay, okay, your answer is going to be how much? $5,000. Okay, let's see, next question is, no, it's related. Okay, if I ask you the question, how much warranty expense, what will be the amount that they are going to report in income statement? In income statement, how much warranty as an expense they are going to record in income statement? 10,000? Look at the journal entry. It's going to be, because warranty expense we did debit by $15,000, so only that account goes to the income statement. So it's going to be 15,000 even though we paid only $10,000. Is that okay? So just maybe additional questions with this. Yes, 5,000 is going to be a payable. It's going to be in liability section. Okay. Okay, let's do the journal entry for all these three. Okay, 2 minutes. So write the journal entry for this. What's your name? Give a star sign here. Okay. For one bonus
You may
point.
be confused like absent or something.
Okay, no.
I missed that.
You'll get, don't worry. Let's do the journal entry. How much you did? Haven't started?
Yeah.
Account, equipment debit, note payable credit, good interest expense debit, interest payable credit. Okay. Anything else? What happened to you? What are you doing there?
Looking for slide.
Slide?
Yeah.
Which slide? This slide or last class slide?
No, the previous one.
Equipment, notes payable, interest. Always interest on an expense is payable. You need to write expense, of course, and then it becomes payable, not accrued interest. Okay. Some simple journal entry should not be a big deal. What is the first one? Yes. Okay, the first one, our friend, what's your name? Praveen.
Yeah.
Okay. Wrote equipment, debit. What is the amount? $17,000 and cash credit. Notes payable. Anyone else from here? Notes payable. Why did you thought that is going to be cash credit?
Because I was absent in last class.
No, it's not. It's nothing related with the absent or present. This is we learned in class 3.
Class 3?
Yeah, when we were in the young baby.
Really?
You remember? No?
No.
You didn't study this in the grade 9, grade 10, grade 11, grade 12. But even if you haven't studied, equipment is going to be debit, that's okay. But we didn't buy it with the cash, right? We issued a note, 6% note payable, right? So because that is my liability, if we buy anything on credit, that's supposed to be accounts payable credit. But now, instead of accounts payable, it's going to be notes payable because I'm giving them a note that has the interest. Okay, so that's why we will be writing notes payable credit by $17,000. December 31st. Accrued interest on the note payable. Interest expense to interest expense debit to interest payable credit. What is? Accrued interest is same. You didn't pay the interest. That's the name of accrued interest, but you write interest payable. What is the amount? 1020. For how many months you recorded? 1020. For how many months?
682.
It has to be 7 months. 680? No, not for 8 months. Yeah, it's for 8 months basically. May, June, July, August, September, October, November, December. Supposed to be 8 months. 680. Very good. Now we are paying it on May 1st. Okay. Again, the journal entry is going to be what? Notes payable, debit, cash credit. Anything else? Interest expense, interest payable. All are going to be debit and cash is going to be credit. Okay. We did it before, so I'm just writing again notes payable. Notes payable debit, interest payable debit. No interest expense also there, because this 4 months I have to pay the interest as well. So it's going to be interest expense debit and then finally cash credit. Notes payable is going to be debit by 17,000 and then this is going to be 680, that 340 and then total is going to be 17,000, 18,000, 18,020. Very good. Cash is credit 18,020.
So why are you recording like interest payable and interest expense?
Okay, very good. Why we are writing interest payable debit? Because interest payable was credit here. So when I am paying the bill, I am paying this amount of interest as well, right? So if you do the journal entry interest payable debit, cash credit. So I'm just putting together interest payable debit, cash is going to be credit. Now I paid interest already for 8 months, but I need to pay interest for another 4 months as well. So because this is happening this year, so it's going to be interest expense debit, cash credit, again put it together. Is that okay? Okay, let's do this one very quick. We can do this, I think, simple. Again, the accounting records for Lismore Manufacturing included the following at 30 June 2016. Estimated warranty payable has already a credit balance. In the past, Lismore's warranty expense has been 6% of sales. During 2016-17, Lismore made sales and paid $6,500 to satisfy warranty claims. Journalize Lismore's warranty expense and warranty payments. First, we try to calculate warranty expense. Question number 11.5. Simple. How much is going to be warranty expense?
Like the last 6%, 6,500.
Okay. Anything else? 6% or 6,500? What do you think?
Okay, 6%. 6% or
Very good. We don't be confused with the payment and expense. Expense is the estimated one. Payments is the actual one. Is that okay? Can you remember all these things? Expense is the estimated one and the payments is the actually whatever we paid. So here always warranty expense is going to be what? Estimated. Is that okay? And the payment is going to be whatever actually we paid. So if we record warranty expense, that is 6% of sales, what is going to be journal entry? Warranty expense, debit to warranty payable credit. What is the amount? 6% of 100,000, so it's going to be $6,000. Is that okay? No? $6,000. Now, how much we paid? We paid $6,500. So what is going to be our journal entry? It's going to be warranty payable debit to cash credit. Is that okay? Okay or not? Warranty payable debit to cash credit. Can you give me quickly how much is warranty payable in the T account after doing all this transaction? Simple. Can you give me the amount? 500. Anything else? What will be the balance of warranty payable will list more report on its balance sheet. Any way to calculate? 500.
Estimated means warranty expenses.
Yes. Estimated warranty payable, right?
Yeah.
Warranty payable, because we have two accounts. One is warranty expense, another one is warranty payable. 500. Anyone? If you can give a correct answer, maybe within 10 seconds, you'll get another one bonus point. 500. Okay, I take that 500. If it is correct, you'll get bonus point. Anyone else?
How much we are recording in balance sheet?
Yeah, how much warranty payable will be reported in balance sheet? 6,500. Okay, anything else? 500, 6,500. You have 5 seconds left. 3,500. No. 2,500. Very good. How? Yeah, we need to get the how. Otherwise, not getting the bonus point. Can we? This is warranty payable T account, right? Okay. Warranty payable T. That's right. What is the balance already in there? Already 3,000 is there. And from your journal entry, what is the first journal entry? Warranty expense debit, warranty payable credit. That is another credit balance, $6,000. Is that correct? And then when we made the journal entry again for payment of warranty expense, what did he write? Estimated warranty payable debit, cash credit, $6,500. So if I just do $6,500, now do the T account. It's going to be 9,000 minus 6,500 is going to be how much? $2,500. You made a mistake by only 2,000. You told 500, it's another 2,000. So 2,500. Okay. Yeah. Is that okay? Any question with this? Everybody got this? Very good. Very important anyway. Yeah, he'll get. Today's class is full bonus point. Okay. We'll come again and again with the bonus point. It's an opportunity for you. Okay, so we have different types of question in the exam from this chapter. One is might be related with notes payable, warranty expense. Basically, we'll be covering 3 topics. One is warranty expense, of course. Another one is notes payable related questions. Another one is going to be gross pay and net pay. That is we call payroll. Okay, so you'll have a mix of questions, but all combined is going to be 16 marks. From this chapter. Yes, from this chapter. I told you, right? Huang Trang manages both cafe, Bats Cafe or whatever. His ordinary time pay is $10 per hour with the time and a half for hours in excess of $40 per week. Trans payroll deduction include withheld income tax of 16%, a weekly deduction of $5 for a charitable contribution to the Fred Hollows Foundation. Tran worked 50 hours during the week. Payroll tax is 6.1%. So we need to calculate the gross pay and net pay first of all. Calculate the gross pay and net pay. Can you try? Calculate the gross pay. Gross pay is of course whatever they are paying to you in raw, right? And net pay is after deduction of all the cost, then whatever amount that you actually pay to the employee. So he worked for 50 hours, simple, 40 hours. If you do more than 40 hours, you get a bonus, what do you call that? Additional money. Anyone? Looks everyone is calculating by brain. Take the pen and then start calculating. Okay. Gross pay is the amount of, without deducting anything, how much we are paying to our employee, okay? And then in the net pay we deduct the something from their particularly income tax and a contribution to the charitable donation or whatever, okay? How much we are actually paying to our employees. How much? Anyone? Gross pay. Gross pay is the amount that you are paying to your employees. So 40 hours you work normal and 10 hours is the bonus. And the bonus payment is 1.5. We are paying him $10 bonus point, or the normal salary is $10. His normal salary is $10, but his bonus time is?
Like his bonus point is 10 hours.
So it's going to be, what is the rate? 15, right? Not 50, 15. 1.5, right? No, he worked for 50 hours, right? 40 hours is a normal payment, 10 hours for additional payment. 2 payments, right? The normal hours he will be paid $10, and how about the additional hours he worked? What will be the rate? $5? If you work for a company and you work for 50 hours, okay, 40 hours they are paying you normal and you are doing overtime more, for example night shift, will they give you $10 or they will give you $5 or they will give you $15? They will give you $15 because you are working over a night shift. So normal rate, it must be more than that, right? The bonus time must be more than the normal time. Is that correct? You still didn't get the point? Got, right? But what is the rate for this? They said that is going to be 1.5 for hours, okay? Whatever you normally get, add another 50% with that. So you are working at a means $5 of this, so it's going to be $15, okay? Now let's calculate the gross pay for this. 550, very good. Gross pay ordinary times is going to be $400 because it's going to be 10 into 40, and then overtime is going to be $15 into 10 hours is going to be 150, is going to be total $5,550, okay? Now the charitable contribution and income tax minus income tax. Income tax is how much? 16% of total income. Don't make a mistake. It's 16% of total income. What is that amount? Anyone? $88, very good. And from the salary, he contributes $5 to the charitable foundation or somewhere. What is the charitable contribution? So I write charity $5. What is the net payment? It's going to be 457. $457. So this is the net payment.
If I deduct charity first, then calculate the interest, income tax, it will be right or wrong?
No. We will provide income tax based on your gross salary. Whenever the ATO deduct our tax, is not based on how much I am contributing for the charity and other stuffs. They already deduct the tax based on my income. Simple, right? You can claim back later on sometimes if you donate somewhere. If they give you the receipt, there are some registered organization you have to donate in that particular organizations, and then if you deduct that one, if you do any charity there, they will give you receipt and then you can claim back your tax. Okay, then they will reduce that income, but for the time being you keep it simple here. $457. So this is the net payment. Okay, let's go this and then. Okay, there is two things. One is these kind of things we call what? Benefits, right? And the other things that they are doing, Fred Hallows Foundation train work for anything else to be deducted from here? He has the payroll tax of 6.1%. Okay, that payroll tax is 6.1%. What is the amount? 33 point.
So what does that mean? The payroll tax?
It's supposed to be 6.1%. No, it's going to be. Payroll tax is usually when you have a gross income more than $500,000. I think, I'm not sure exactly, a big amount over that. So your employer gives a tax on this to the government. Because you are paying a high salary to an employee, so you give more money, extra tax on this to the government. Yes. Okay. Okay. So this is what we just keep it here: gross pay and net pay. So this is what we're doing. So payroll tax. Remember the payroll tax in terms of when you are calculating gross pay and net pay. Payroll tax is not coming here. Okay. Payroll tax is not coming here. Okay, this one. Can you do quickly this one? This one is the journal entry for this. Okay, ignore this one. Let's go. Let's move to the next. Okay, calculate Ann Winter's gross pay, payroll deduction and net pay during 2016 from this calculation. If you are doing this one accurately, then we'll be finishing from today here. Okay, very important for the exam as well. Similar questions. Ann Winter is a manager at the Commonwealth Bank. During 2016, she worked for the bank all year, $6,500 monthly salary, and she also earned a year-end bonus equal to 15% of her annual salary. So she has two. Ann's income tax withheld during 2016 was $820 per month and plus $2,480 on her bonus check as well. Ann authorized the following payroll deduction: one is charitable fund contribution of 1% of total earnings and life insurance of $20 per month. Commonwealth Bank incurred payroll tax expense for them. Total payroll, the bank provided Ann the following benefits. So first of all, we try to calculate the gross pay, okay, and then payroll deduction and net pay. Then we will come with the other things, okay. First, calculate the gross pay. during 2016. So when you get a question during 2016 means this is we are calculating for month or for year. It's going to be for year. Very good. Do it right now. Any problem with anyone in understanding this concept?
So like the 820, so what is that 2000 plus 2480 on our bonus segment?
820 is going to be per month. So you are paying basically for every month you have to multiply by 12. And that 2480,
Deducted from like that 15% she's getting bonus from?
you know, first we write gross pay, whatever the amount she is earning. Then we slowly deduct.
Gross pay.
Gross pay,
9700.
yeah, no, gross pay is going to be 6,500 monthly.
78,000 plus 15% bonus.
Yeah, write the gross pay first and then we come with the net pay. 1,700. Very good. Now you go to the deduction section. The first is gross pay. What happened, sir?
Sorry?
Have you done?
No.
Why? What is gross pay? Are you getting any point, anything that to start with the calculation?
To be very honest, not
No.
with this one.
I mean, why? You're not getting any point, why? Is you didn't understand the questions, or I mean, you haven't studied anything on this chapter? Is that? You didn't come to the last class, did you?
I gone to visit for my eye checkup
Oh,
in last class.
okay. Okay, but then you need to study a bit hard.
I'll get help from my friends.
Okay, very good. 76,200 and no, 243 supposed to be. So this is 78,000, 11,700. What is this? 2,480.
15% of our annual salary. Oh, wait. 2,480 on our bonus.
Okay, 820 is going to be income tax plus 2,420.
Plus 2,480 on our bonus.
Is only for one time.
Yeah, only for one time.
76,000. Why 76243? Yeah, 243. Yeah. You got it? So the bonus came once in a year. So from the bonus, deduction is also once a time. 2,480 is not monthly. So you go. Okay, that's okay. Yeah, it should be. So
Total 87,220.
okay, 818 to. What is this? 12.
Income tax
800. Yeah, 12. So and then
9,840.
and then you have a life insurance
12 into 20, 240.
240 and charitable foundation
897.
897. This is a mistake, I think. Yes. Very good. Excellent. Have you got? What is the amount?
76,243.
Is that okay? You got it, sir?
I got like 76,240. That is the net amount.
276,243 is the net pay.
And what to do with those incurred payroll tax 8% and the bank?
We'll come with this. Okay. Anyone from here? Very good. Sorry. 43, yes. Yes, 76,243. Are you okay? How about this? Very good. Some of you are doing good. Very good on this. So, simple calculation is just like a primary school calculation. Okay. We have a income that is $6,500 monthly salary. So, we multiply this for 12. And then she got a bonus that is 15% of her annual salary. So what about the bonus salary that I'm getting? Additional is going to be, 15% of this. So salary, how much is the salary that you guys got? 78,000, right? Salary got 78,000, and then bonus is 11,700. If I add together, is going to be $89,700. So you record this way first. This is our income. This is called gross pay. Okay. Now net pay is after deduction all of this. The first is tax, $820 per month. That means I need to multiply by 12. So it's going to be how much? 9,800. Here is deduction 840, and then 2,480 is only one time, okay, because it's based on the bonus, so it's not going to be every month. No mistake here, it has to be only for 1 month. So I take that is only for 1 month, so it's going to be 2,480. That's equivalent to what? So basically I just go to the deduction tax, okay, right? Tax is going to be 9,840 plus 2,480 equal to 12,320. Is that correct? And then what we have, charitable foundation fund contribution is 1% of total earnings. So 1% of total earnings is 89,700 into 1%. So that is my charity, and that is 897. Very good. And then she has the insurance, life insurance, $20 per month. Life insurance is $20 per month into, it's going to be 240. So if I deduct now 89,700 minus these 3 is going to be 76,243. Now we need to calculate bank's total 2016 payroll cost for an winter. So there is the difference between gross pay, net pay, this part and next part. Okay, what is the difference? Anyone? Gross pay, net pay, this is one portion, right? And then they are coming with payroll. Okay, that's we call actually fringe benefits. Fringe benefits means this money we are giving to the employee as a cash. So they deduct something and then they go home with the rest of the money. These things, payroll cost, we actually give benefits. For example, if I give benefits on behalf of the employee to the health insurance, superannuation, many things we are contributing but not giving anything directly to the employee as a money, we give them benefits of that. But that benefits also is a cost for us, right? For example, we are giving a transportation benefits, okay? That's $40 per week. So that is the cost for us, but the employee doesn't get the money. So that's why we are not recording it here. We will have to record this one under the here. Okay. So it is, for example, bank incurred payroll tax as expense 8% of the total payroll. Whatever the money they have, bank also is giving. Bank is why? So basically, don't be confused. We are working on behalf of the bank. Okay, and we are paying salary to the bank's officer or whatever bank's staff. So bank is paying basically 8% of the total payroll as a tax. The bank provided An with the following benefits. So he also has his own insurance, but bank also giving his employee another insurance that cost $40 per month, superannuation benefits to be paid, and during her retirement as well. The bank's superannuation plan was $100. So calculate how much the benefit they are giving to the employees. It's annually, yes. Again with annual.
So 8% of the total payroll means net payroll or gross payroll?
Just a second, let me clean here. Payroll tax is going to be, we already, the total amount, right? Total earnings.
The net one or?
No, not the net one, gross one. Always with the gross one. Employee payroll tax is going to be 8% of this one. How much is this? 7,000? 17116. Oh, sorry, 7176, right? So this is our cost we are giving to the employee now. Let's go to the next one. The bank provided with the benefits, that is private health insurance, $40 per month. So 40 into 12. Again, add that one as well. Insurance, health insurance is going to be health insurance. Health insurance is going to be 480. What is next? We are giving them as a superannuation, right? How much is superannuation that we are giving? Superannuation is $8,100. Yes, it's annually. So now add all together.
15,750.
Okay, 15,000, but we will also be adding this amount because this is also our cost, right, for the employee. So add this one, $89,700 plus all of these benefits that we are giving to the employee. Add this together and see how much they are giving.
105,456.
So 105,456, right? So this is a cost for an employee for a Commonwealth bank. Is that okay? So whenever they are giving salary, it does not mean that they are only giving the salary. They are giving other benefits to us and they need to add all together here. And that's what we will be giving them. Okay, this is the total cost, payroll cost. For example, this university as well, when they are giving salary to the staff, they are just not giving a normal salary one. First of all, they are giving salary plus also superannuation contribution and maybe some other benefits to some other people, health benefits or other things. Okay, this comes whenever you are working for a company, you have insurance and everything. So this we all together and then find how much money we are spending for each staff. Okay. Any question? Any question with this chapter? First of all, we need to focus on notes payable, that is a liability. And second, we talk about the warranty expense, and you need to have a good understanding about warranty calculation and also recording the journal entry. And third is payroll tax. Okay, so 3 different questions, and out of these 3 you will be tested through. Any question before we finish? No? You take a break, take a coffee. Okay. Yeah, break time, and we'll be back in 10 minutes time. Okay.